Welcome back to Grow Your Impact, Income, and Influence, the number one show helping you reach millions. Today, we are going to be talking about one of my favorite subjects, which is how to invest your money. If you are a business owner and you are piling all your money back into your business, I'm going to show you how you can build lifetime wealth with today's guest. We're going to be talking about how to avoid all the pitfalls so many people do. They dump it into bad investments. We're going to be talking about great investments, which is real estate, trailer parks, and other syndication vehicles that get you great rates of return as well as huge tax benefits. Who doesn't love that? Ian, how are you doing today?
Steve, thanks for having me. Doing great.
Awesome. Well, I know you're joining us from Austin, Texas. That's a fun place to invest. Tell me how this got started for you because you were actually a business owner who didn't know anything about any of this world, and now that's your full-time thing. So tell me how we got here.
Yeah, so I grew up in Austin and got involved with a family business. There was a dry cleaning company. And so this was about 2009. I got out of college. 2010, I got into the business. So dad had stepped away and said, go run it like it's yours. It's not yet. You'll have to buy it someday, but go for it. And so I grew up as an entrepreneur. That's how I, identify as today. And I started investing in real estate in 2014, buying single family rentals. Then I went into commercial, like small commercial triple net properties here in the Austin area. Went to Colorado for another investment, and then eventually got to a point to where I sold my business. So real estate was always the journey along the way. As I was running my business, I was taking any excess and investing it into real estate. And now that I've sold my business 2 years ago, that is my full-time thing. I am a passive investor. I help people invest passively into low risk real estate. And I'm really passionate about it because most business owners, including myself, don't know about it or didn't know about it when they were running their business. So I like sharing how it can help people grow their wealth outside of their company.
I mean, you are preaching to the choir. I absolutely love this because the number of conversations I've had with business owners that are like, my business did 3 million or 7 million or 18 million this year. And then they're like, I had one. We did 7 million this year. I have my house, I have my car, and I have about 30K in the bank. And it's like, what did you like? Yes, you
Wow.
reinvested it into the business and you spent some. You went first class. Like they were like, well, we went first class to Australia. That was, 180K. First class flight, $60,000. But oh, we have it, so why not spend it? And it's like, man, the biggest thing that I always tell people is if you can put 10 to 20%, so you can start smaller than that, 5%, but build up. If you just tuck that money away before you know it, like you have a huge nest egg that is paying you. So let's start with you owned the business. You started putting it into single family. What got you interested in real estate in the first place?
I grew up seeing my dad do it. I think that's what allowed him to step back from the business. As a business owner, and y'all know if you're listening and you're a business owner, it's easy to get burnt out. And he had come to that spot. And the reason that he was able to do that and kind of walk away was there was real estate income. And so I think that was subconsciously my model that, okay, I'm going to follow that. I want that because I knew that he got to spend a lot of time with me growing up playing sports. He got to coach my sports teams and we got to travel and all the fun stuff that you want to do with your kid. But sometimes we make business our excuse. And so I just thought, you know what? Maybe someday if I keep investing into real estate, buying one at a time, because that's the only way I knew how to do it, maybe I can replace my or match my income coming from the business. And when that day comes, I can get out of the business. Well, it never quite got there. So, my income from rentals grew over time, but it never got, business was doing really well. And so it was very hard to keep up. But it was that thing that allowed me to step away when I did sell the business, knowing that I still have income every month coming in from, various rental properties. And so I like I like helping people know that, reinvesting in yourself and in your business is crucial. And I'll say this, there's no better way to make income. If you run a successful business, that's the way to really make income. But when you need to look outside the box and think, okay, what happens if something happens to me or there's a a major lawsuit or a death or an injury in place, something that would shut you down that you didn't have control of, how are you going to earn outside your business? And so you need to be thinking about, how do I allocate my extra cash that I'm sitting in a checking account earning zero? And what can I do now that will help me today so that when I want to walk away, I can? Because nobody wants to do it forever. Like you should have an exit plan. Even if you love what you're doing, someday you need to step away and enjoy it.
That's, I mean, 100%. It is so easy to get caught up in the business stuff of like, well, if I just put the money back in, it's going to grow the business and then there'll be more thrown off. And if I just keep doing that 10 years from now, it'll be thrown off millions, blah, 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 blah. But it's like, that's not the truth. The truth is,
Yeah.
if you just tuck a little bit away, um, you can, and it builds, and it builds absolutely by itself over here, separate from what you're doing. It's so, what would you say to people that say like that's a dream? Real estate, especially single family real estate, is a nightmare. I've tried buying a rental. I've tried buying a single family. It just seems to, have problems. I have plumbing, I have electrical, blah blah blah, bad tenants. How do you tell people, because you obviously started to go that route but then you found a
Yeah.
better way to do it, but what would you say, like, real estate, what makes real estate such a great investment?
You can earn money a couple different ways in real estate, and it's unique to that type of investment. And what I mean by that is, number one, you can do it yourself if you want to. So you should get started. If you're on the fence and you think, I'm not comfortable with passive investing, that means somebody else is doing it. You're probably amongst 99% of other entrepreneurs. You're used to running the show, and you should still get involved. Do it yourself. See if it's for you, and just buy something in your local market and rent it. You don't. It's not overly complex. You don't need large financial models for these rental homes. Um, I share the story that when I first got started, I literally knew nothing in 2014. I was listening to Bigger Pockets podcast. It was like, if you can earn 200 bucks a month, you're in good shape. So it doesn't change your life in the short term, but then, 15 years, 10 years down the road, now you have these properties that are either paid off or getting close to it. The tenant has paid them off, and it really opens the door for you, in the future. But I'd say for business owners, to get started, take action somehow, because again, you never know when the fun stops with your business. And real estate, I mentioned real quickly that you could get paid in a couple different ways. Well, you have cash flow. That's not that significant if you're having one asset at a time. Like if you have a rental, you won't make much from it. But over time, that will. You have appreciation, which happens without your control, depending on the property type. But the biggest thing that gets everybody excited is the depreciation and the immediate year one tax benefits that you can get through real estate that you can't get through other vehicles. Yes, there are business deductions that allow you to do this, but you can really stack to where you can both A, earn a lot, and B, keep a lot while you're building wealth at the same time. And so you could make 500K from your business or wherever level you're at in your career. But like if you make 500K and then you give 185 or 200 back to the government, it's why not keep it if there are other ways to do it? So that's why I like talking to business owners about it, because you work your tail off to be successful, and there are ways to keep your wealth too.
Yeah, I mean, keeping your wealth is one of the, like, I feel like when I got started in business, it was like, oh, if I can just get to 100K a year, if I can just, get to 200K a year. And then I remember I was at a business mastermind somewhere and somebody mentioned, they were like, okay, you're making 450 this year. I think it was 2015 or 16. And they're like, how much of that is going back to the government? I was like, well, I have a tax guy, I'm getting write-offs. But at the end of the day, I was still writing a pretty healthy check. And
Yeah.
they were like, hey, what if you found some creative ways to spend that money in an investment and not have to give it to the government? And I was like, oh. So let's talk about that for a second, because this is one of the biggest things I hear business owners say all the time. Well, I need to put the money in, I need to hire a new person, I need a new machine, I need X for my business. And it's like, okay, but you're paying taxes. If you have 100 grand a year going to taxes, you can take that money and swing it into an investment. Talk to me about what that looks like, because you're actually helping business owners do this.
Yes. So you have a lot of options. And as a business owner, number one, get a CPA that not only does your books properly or keeps you from being audited. That's the fundamental of CPA. But if you can find either a tax advisor or that same CPA that can help you identify how can you make better use of your money and how can you pay a little bit less in taxes, you're going to be leagues ahead of the majority of people. So real estate's one of those things that it'll offer a lot of tax benefits to people. Now, be careful when there's a lot of marketing out there that tells you that right off the bat, you can invest into something and then offset it against your ordinary income, your business income. Most of the time, that's not accurate. So be very cautious when you do see that. There are ways to do it. Often it revolves around somebody having real estate professional status. So, not a CPA or tax advisor, but check into that to see if that becomes an option for your scenario. And then you can really unlock some amazing depreciation benefits to where you can offset it against your ordinary income. But for the average person, even if you get involved with something to where there is a depreciation study, and what you do is in these passive deals you get into, you get a what's called a K1 that has depreciation on it, which is what you already get if you're a homeowner. It's already there. If your house is 27 and a half years, it's divvied up a couple $1,000 a year, whatever the value of your home is, and you're getting that as a deduction, but you're not losing real money. So it's a cool avenue to get the deduction off what you're actually paying out in taxes, but you're not losing money, which is much different than like people that do tax loss harvesting with their stock account. Tax loss harvesting is you've lost money and you've sold it to then balance it with gains and other positions. Um, if all this stuff sounds foreign, just I hope that you can take away a couple nuggets from this and start looking into like, wow, how can I put some money aside? And for business owners, just don't let it sit stagnant. Steve, you mentioned maybe they need to buy some equipment later in the year. Okay. I know business owners that say, I've asked them, how much do you keep in your checking account? And they're like 400K. Okay, how much do you really need and why do you need 400K? Well, I don't. It just makes me feel good. I need about 100K. I've got payroll and surprise expenses. So doing that, you've got 300K left over, maybe call it 200 to be safe. Go put it somewhere. Put it in something that's liquid that you're earning. Because I tell you what, it's sitting in the bank, it's 0% earning, and the bank is taking your money and they're earning on it. So why not play the game that they play and
Well,
put your own money back in your own pocket?
absolutely. That is, I mean, the at least put it in a high interest savings account, which you can get a couple percent. I mean, I know people that do like somebody that's very similar took a couple hundred grand and put them in short CDs, 3 and 4 month CDs, where at least they're getting something. And if they had to, they could cash out and take a penalty. But there's so many different places that you can put it. I want to go back to real estate. So let's talk about one, you talked about some of the depreciation benefits, real estate professional. That's going to be outside the scope of this podcast. But I will say the benefits, even if you don't get the depreciation, the benefits of being in a good real estate investment, what does that look like for somebody? Like you mostly invest in trailer parks. Tell us a little bit about what typical returns are.
Yeah, so I focus on low risk investments. This is, 7, 8% is what I'm targeting. Now, beyond the money and beyond that return comes the benefits of the depreciation, which helps me in my personal financial situation, and as does it with many others. And then there's always a component of the upside later for, again, I talked about you can make money a couple different ways in real estate. One of those is appreciation. Don't ever bank on that. I look for cash flow properties from day one. I don't like getting involved with investments that have a lot of things that have to fall in place in order to be successful. So huge turnaround projects, things like that, aren't my jam. That's why sometimes the returns that I invest in may not seem attractive to others. Stock market's making great money, right? Well, yeah, and a lot of people haven't felt the sting if they've just been investing, let's say, since 2010, and they started putting money in 2010. They had a big hiccup in 2022. It rebounded the next year. Like it's hard to compete with those percentages, but you should spread it out. And I'm not saying don't put your money in stocks just because I'm a real estate guy. Like put it there and then find something that you're comfortable doing. And that's the number one thing. Going from like an active investor and an entrepreneur, it was very difficult for me to trust somebody to put my money with. That will be the obstacle that you'll come up against first because everything seems good on paper, but you have to like that person and know, is this person going to be around when something hits the fan? is this person shady? Do I like them? Because you're essentially partnering with them. You're giving money upfront in advance and you're allocating those funds so that you in a later time can earn a return. And you're paying to be passive. They'll take a cut of the profits, but you have the time freedom. You're not running the day-to-day stuff. So Steve, you mentioned earlier about like being in real estate and what it's like to be a landlord and what it's like to be involved passively. I can tell you, I'm still in both, and there are pros and cons to both. But boy, I love just finding good people with teams that exist that run it better than I could. Like I have no problem saying they run it better than me, and partnering with them and not having to deal with the headaches because the money's about the same. Sometimes it's greater because they run a more sophisticated operation, and I'm not dealing with the tenant turnover. I had a property that I walked into. Someone walked out of their lease. Rent payment didn't come in, and I show up, and I'm getting bit on the ankles, and there's fleas in there. And they're like, crazy story. You have to deal with that kind of stuff. I never dealt with that in my 10 plus years, but that was a recent one that I was like, it's not for everybody, right? But there are different paths, and a lot of business owners, including myself, didn't know that that existed, that you could park money with an operator that you still need to vet and have the same benefits, but you're not putting in the time because you're already busy enough. You got a lot on your plate as an entrepreneur.
I mean, so just so you guys listening understand this, when you invest passively, you are investing with somebody who is going and finding the property. They're raising money, usually multi-million dollars, to buy the property, and then they usually manage it. The thing that I would love to ask you this question, what do you look for in an operator? Because that's the biggest thing where I've seen people get burned. I've seen people go into syndications. Oh, I really like this guy, but they didn't ask the right questions, and then it doesn't work out so well. What are some of the things that you would look for in an operator before you put your money in?
First thing I look for is, do I like that person? Do I get a good feeling from them initially? Um, there's more that goes beyond that, right? But that's step one. If somebody comes off and you don't like their demeanor or how they're acting, just walk away. There's lots of other opportunities for you to go invest in. Then you can ask about their track record. Asking about failures is good. If they say, well, I haven't failed or this can't fail, that's usually a red flag. You want some failure in there. I think that as a business owner, you've probably experienced failure before too, and everybody who finds success generally does find failure along the way. So you can do that. You ask about safety of your money, like how I know you've projected that they're going to get these returns, but talk to me about the worst case scenario. What happens if XYZ? And ask quite there is no question that you might think that's a stupid question or this guy's like some guy or gal is some big wig in the real estate industry and I'm going to sound dumb if I ask this, but don't. They need your money to help complete the deal. People that say uh, you know we're filled up, we don't need your money. I think that's a marketing tactic to get, from the psychology standpoint to make you want to dive in, right? It's your money and you need to decide when you're comfortable how to go with it. Two more things I'll say, and this is before analyzing any of the numbers or looking at their deals. Um, you should get on the internet and type in their name and type in scam, type in fraud, find anything, find a Reddit forum, right? Anything, because these are real people that maybe had a bad investment that don't know where to vent. So do that as well. That's just a quick, search there. You could look if there's any like legal cases against them. Um, and then mine is a little bit different now because I'm not just a passive investor anymore. I now make a business of pooling together capital. What I do is I syndicate funds. We gather money from our network and we go in as one unit and we're co-investing as a group. So my money goes first. And so I have to like that deal. I go through, there's a 200 plus list of questions and, sometimes not all of them are asked, but the key components are there. I'm vetting these people. I'm doing due diligence. I'm poking holes in their underwriting. I'm visiting the sites. I'm background checking these people all before it gets to anybody else. That's just for, if it's going to be my money and I'm going to ask friends and family, like there's no amount of dollar gain that I could get from that, from not making sure it's as safe as possible, then I'm happy about it too. Um, So I just look for good people. It's all about people. The numbers blur together, the returns blur together. So sometimes, like in fact, my guard goes up when there's like incredible returns on something, and people start licking their chops and saying, "I'm gonna make 18% this, every year after year." Well, there's usually a higher level of risk involved with that, and so businesses are run on P&Ls, and we know what our margins are, and sometimes in the real estate world, higher payouts mean higher risk, and it's just something that I choose to avoid.
Yeah, I think that's a good place to go for sure. I mean, I always tell people look at how long they've been in business, how many deals have they done, and if they say that all of their deals have been flawless, that's a huge red flag because
Yeah.
you and I both know that's not true. I want to know, what did you do during a capital call? Did you put your own money in to try to make people whole? Like, how did you respond to that? Um, I think because it's easy to look good when things are going well, when things are easy, but it's like, what did you do when you were under stress? That's when you learn whether it's a dating relationship, whether it's a friendship, whether that's an investment. Like, I want to know how people act when their back is against the wall and when things are not going the way that they want them to, because that's where you really see if it's good investments or not.
Yeah,
Um,
and real quick, similar to
yeah,
like dating and relationships, or business partnerships, you're partnering with them and giving them your money. So communication should be an expectation as well. Getting
yeah.
updates, regular, you want to know what's happening when stuff is bad. You want to know. It's you all know in every scenario, it's better to know, at least be informed versus them just not saying anything. I have experienced that as a passive investor to where just there's zero communication after the investment, and even if nothing's going wrong, it's never a positive to do that. You keep in touch with people along the way, and you want to know what their communication style is or their cadence of how often they're supposed to check in with you.
Well, you can actually, this is a question that I ask before I invest. I say, "Hey, can I see your past communications for at least 3 investments?" And one of the guys that I invest with, he sends out a video update on the first of every month and they send out a weekly email.
Yeah, that's great.
And
That's
that's
very good communication for sure.
yeah, exactly. And I mean, a lot of times the weekly email is 3 sentences, like da 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 investment, no changes this week. But
Didn't lose money until next week. See you
right,
then. Yeah,
like, but at least and when I ask for that, like they were to me within a day or two.
yeah.
And it's like, okay, that's awesome. I could see one investment specifically, 3 years of video updates on the first of every month. I think he maybe missed one and it was like 3 days late. And that's like, that gives me confidence because I want to know. And that, to your point, communication, good, bad, ugly, like I want the person to give it to me so I can make a decision or I can know what's going on. That feels so much better. There's nothing like writing a couple $100,000 check and then never hearing from the person for a year. Like
Yeah.
you're gonna be pretty pissed
Yeah.
off.
Has it happened to you? It's happened to me. It's
No, thankfully
no.
it has not.
And shame on me. That was, prior to getting involved with the business and now what I do, now, but that was one of my early investments. And it's like, you know,
I almost,
just
well, I
email
won't,
or call.
I've definitely had investments that I shouldn't have invested in. I've not had the communication problem because I knew to look for it. But there were other
Good.
things I invested in that were not not correct. I think your framework for it is correct. So let's go into what's like if you're a business owner and you're like, okay, I can carve off 10%. I understand what I'm looking for, not crazy rates of return, but I'm gonna need some depreciation. Um, what kind of time frame are we talking about? Like I have not invested in trailer parks. So the real estate syndications that I've done, apartment buildings, it's usually a 3 to 6 year time horizon. What kind of horizon are you looking at?
I would say it's generally the same. I tell people 5 years, and a lot of people amongst like different asset classes use that 5 year mark, whether they're projecting to sell then or if they're going to implement a refinance and hope to get your initial investment back at that point. So if you're going into equity or ownership with these any type of property, anticipate it being like if you were to buy that property yourself, and that you might not be able to pull out money or get your money back for 5 years. If you need it sooner, or if you're a business owner that's holding on to cash that you may need for your business, then I would look for the on the other end of the spectrum when it's not involved in like owning property. Debt funds and private lending are very popular right now. They provide cash flow, and there's various degrees of safety, right? Lower returns mean more safe, higher returns are less safe. And so you have to find what you're comfortable with, and then you could, assuming you know the terms of that, then you can park money in there and pull it out as you go or as you need it. So I know a lot of people that use those as, like, I call it a parking garage. I do it with my own money. I'll put it into a private lending fund, and then when it's time to, let's say, go buy property or whatever you need, then find something that's a little bit liquid to where you're not tied up. Like, a lot of CDs are 1 year, but you can find these lending funds that are less. And so that would be my, depending on what your business needs are. If you don't need that money for 5 years, get some appreciation, park it in property. If you need it, then find something that pays now, pays on a cadence, and you can get it when you need it.
Awesome. So next question I have, just because I've done apartment buildings, tell me a little bit about trailer parks. Like, I think when
Yeah.
most people think about trailer parks, they're like, oh gosh, they picture, National Lampoon's Christmas Vacation, or like just like not somewhere that most people would think about investing. So talk to me a little bit about what are the benefits, and let's dispel some myths around it.
Yeah, it's not just a bunch of people with banjos on their porch. There's I fell in love with, I say fell in love. I enjoy trailer parks, mobile home parks, or as they're called today, manufactured housing communities, um, because they do a couple of things. Number one, there's a limited supply. Cities don't want them popping up everywhere. And so, unlike the apartment complex industry, or if you have commercial retail strip centers, the zoning's not as restrictive for those because it's just generally a part of what the city looks for. With manufactured housing or mobile home or trailer parks, often the supply is capped because the city doesn't want any more. So you have this asset that you can't just go, and they're not going to build one next door. So there's a little bit of protection there. It also, I think, helps solve the affordability crisis. It's things are getting more expensive, and so from a rental standpoint or an investment standpoint, you want something that is going to be affordable for the people, and that should, if run well, be fully occupied or have good occupancy. So we're looking for good markets, and we're looking for a situation to where if the two bedroom apartment rent is maybe $1,100, and at the mobile home park, they're renting the lot or the dirt underneath the manufactured house, that might be like $500. And so for some of these families, that's crucial. And a lot of them, what I like about it, the longevity is there. So yeah, the average stay, this is a statistic that came out recently, was like 14 years for a resident. And often they can own their own, even if they're renting the lot, they can own their own manufactured home. So there's some pride of ownership as well. You're not having turnover every 2 years, because a lot of them will park and stay. It's also expensive to move your house because they are, in the term mobile home, they are mobile. But if that costs you $10,000, $12,000, and then you have to go hook it up somewhere else, people are disincentivized to move these homes, and so often they either stay put or they sell them to the next person. But you, as a investor or park owner, still get the lot rent, which is what you want, because then you're not dealing with the tenant. In terms, when I say not dealing with the tenant, if their toilet starts to leak or if their roof is leaking, they can own their own home, manufactured home on your property, and they're taking care of all that, and you're just supplying, let's say the electric hookups, the water, sewer, that sort of stuff that it's a little bit easier to manage versus the turnover. So that's why I like that class, and that's why I got involved. My business is focused on that, and I'll continue to do that. And it's always just kind of slow and steady. Nothing. These returns won't blow your socks off, but that's what I'm comfortable with.
Well, I mean, I think there's a couple things there. One, the first one is you're not actually managing any tenants. In apartment buildings, we're still managing tenants, right? Like every building that we own, pretty much because they're larger, everyone that I've invested in has on-site management. We're doing things to bring tenants in. Um, how do trailer parks appreciate? Like, how do they gain in value?
So the homes themselves, they can trade on the free market. Like, if a resident wants to sell their house, they can. They can put on the MLS. They can sell it, with a yard sign, however you want. In terms of gaining value and appreciation, there are a couple different ways. So they are valued as a business and not like a single family home. So if you live, and for comparison's sake, if your house is worth $500,000 and the neighbor to the left and the right of you sell their house for $450,000, your house is now potentially worth 450 because it's valued on market comps. In the mobile home park industry, same thing with apartment complexes. You run it like a business, and you look at the profit and loss statement. And so, by filling occupancy and by increasing rents, you're effectively adding more to your bottom line. And then, commercial real estate, in that regard, is valued on a cap rate. So it's just some sort of multiple, essentially, of what your net income is, similar to how you could sell your business. So that's how they gain value. One cool thing about mobile home parks, if you have an empty space, it's said that based on today's cap rates, that if you fill an empty lot with just getting lot rent, I'll say it, $500 of lot rent, you can add anywhere between $60,000 to $80,000 of value to your property. So to put that in perspective, if there's 10 empty lots and you bring in, sell homes, even if you sell the home at cost and you start just renting the lot out, then filling that up based on cap rates can bring you at 10 homes at on the low end $60,000 a piece per pad. That's an extra $600,000 in equity that you can get by just placing those homes there. So there's a lot of ways to grow your investment. Every asset class has them, but that's just one thing that we try to go in when we first get a property, fill those things up, boost the value, and then you've got some either a sale strategy or refinance strategy, later down the line.
Okay, cool. So the question that I have, I guess, like I mean, that's similar to an apartment. Like if you raise rents, then the total building goes up. How does depreciation work? Because on depreciation on an apartment building, there are things to depreciate. You can do a cost seg study. How does it work for a trailer park?
Yeah, great question. So they are actually pretty favorable for cost segregation studies as well. A lot of the infrastructure that you may have, you know that you can look at the part of these studies that doesn't count is the land value itself. But often, especially with some of these mobile home parks, the land value itself isn't worth much. And so what you can do is then break down certain components based on their lifespan. You can look at the roads and the infrastructure, the electrical, the sewer systems, and you can start to depreciate all these different components. So you're still able to obtain healthy depreciation on your investments. And so, especially earlier in the year, it was Big Beautiful Bill came back, 100% bonus depreciation. So that's not just for mobile home parks, that's for every asset class. You can take advantage of that, and you can really start to keep money in your pockets. Or if you can't offset it, again, we talked about this earlier, if you can't offset against your ordinary income, at least for the future, you can hold on to that paper loss as think of it like a virtual piggy bank. And in the future, if you gain from that investment and have income from that investment, then the first chunk of that can be tax free all through the depreciation study that's given. And you don't have to be a real estate professional to take that.
Awesome. I like hearing that. I wondered how that was going to work because I know normally you can't do land.
Yeah.
If people want to learn more about what you are doing, where should they go? What do you have for them? How do they get a hold of you?
Yeah. So for listeners of this show, what I did was I created a passive invested cheat sheet. It's essentially, we talked about it earlier. What questions should you ask if you're thinking or curious about getting involved with your first passive investment? So we'll leave that link in the show notes. You can also find me. My website is runsteadyinvestments.com. And you can find me on LinkedIn as well. Just search Ian Noble. I think there's a handful of us, but um, if you're watching the video, maybe you know what I look like. But yeah, search Ian Noble. You can find me on there. And that's generally the most active I am on any of the social channels is on LinkedIn.
Okay, awesome. So we will link all of that in the show notes down below. If you've enjoyed this conversation, you should check it out. It's a good place to put money, like anywhere that is not your business that shows a slow and steady return, especially if it has tax benefits. We've talked through a lot of them. Although I love apartments, I'm trailer parks also sound great because there's it's diversification within the real estate niche. Ian, I want to say thank you so much for coming on and sharing with us. I appreciate the conversation.
Thank you for having me. Appreciate it.
Awesome. To everybody else out there, we'll see you next time on Grow Your Impact, Income, and Influence.